Welcome to the Nomad Hedge, everybody. In today's video, we will analyze the S&P 500. We're going to be taking a look at the SPX, which is the index level. And basically, with this video, we're going to take a look at the wave count and see how much left we do have in this bull market, especially since we started this bull market in April. And if we plot the Elliott Wave count here, we can see that we started wave 1 here of minute degree back in May. And so we've done a 1-2, and then we had a subwave here to wave 3 and then wave 4. All right, so now we are progressing towards wave 5. Now we do have a target here to around 6,850. The thing is, if we're starting to break above the 6,900 level, we do have to take into consideration that wave 3 can't be the shortest wave, because that would break the most fundamental rule of Elliott Wave. And so if we're starting to get above the 6,900 level, then we would invalidate this wave count. And we do obviously have other wave counts here, but this is our primary view of the market. Okay, so if we zoom in here, we can see that we are progressing towards wave 5, and that we have likely a wave 1 and then another subwave here, wave 1, 2, 3, 4, 5. Okay, so this cycle here should end shortly, and that means we will correct this move here, and we'll make a pullback here to wave 4, which would set the stage for this wave here, and that will be wave 1, 2, 3, and then we have a 4 here, and then we'll get a last push here towards wave 5. And so that is why we view this market this way. The reason being is that if we take a look at some of the indicators here, we can see that ever since we started this wave here, we can take a look at the RSI, for instance. We broke the channel here, the trend for the RSI, and that set the stage for wave 1 to conclude. And then once we had wave 3 here concluding, which is this trend line here in the RSI, we had a break of trend right there that confirmed it with the RSI as well. And so what we're looking at now is a negative divergence, because that's exactly what we want here. We want a negative divergence from wave 3 towards wave 5. And that is what we have right here. You can see our price is moving up while the RSI is moving lower. So this is why we think this could be the primary wave count here for the S&P 500, and that we do have other alternative counts, but this is the most accurate right here. For the short term, we can see here, if we take a look at, for instance, the futures market, I'm not going to pull it up here, but in the futures market, we do actually have this price candle here breaking below the price candle here. So that could mean that we have already begun here a wave 1, 2, and then we could have concluded here wave 3, 4. Wave 3, 4, excuse me, the writing here. And then right now we are progressing towards wave 5. So we're pretty much beginning to see the imminent conclusion here of wave 5. And we will likely correct the entire move here that started back in April. Now, we're not calling for new lows here because we don't think that's going to happen, but we're looking for a 5 to 10% correction. If we switch over to a weekly chart and expand this one a little bit, we can see here, if we would get a 10% correction, we could likely retest the former support resistance here that began wave 1 primary, right? So we have a wave 1, 2. And if we would get a pullback here, retest this level, that in our opinion will set the stage then for a minor degree to begin. Okay, so this is the minute degree, and then we're correcting this move here from April lows, and that will set the stage then for the minor degree to begin. So this will offer a new buying opportunity. And so this is how we view the market here, and we're going to obviously keep you guys updated. And if you haven't already, you can follow me on X or other social media handles. You can subscribe to the channel for more insights, and I'll keep you guys updated. Thank you for watching, and I'll see you in the next video.